Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 18th COT report in 2014, and as usual we're going to start off with the changes in commercials positions. So here we go. S&P 500 on top of our list with a 25% change in commercials positions. We've got 17 in large speculators and only 13 in small speculators. You can see the changes over here. They're larger than average, nothing too unusual. We do see greater changes in the past. And of course, as I've shown you before a couple of times, these are occasionally pretty effective COT change signals. Of course, this is a bullish COT change signal. What's interesting to see, but of course it's again not unusual, that only small speculators are optimistic about this market right now. Let's have a look at the 5-year chart and see how extreme this market is. Here we go. You can see that we've moved away from these bearish extreme levels. So we cannot really talk about anything too large extreme wise. So basically this rally, of course, could eventually continue, and we may see higher prices in the near term. Gasoline, our next market, we've got a 22% change in commercials positions over there, 25 in large speculators. Here you can see the changes. Again, this is a more of a bullish change signal, possibly pushing prices a bit higher. You can see the last one over here, we had a pretty effective bearish change signal over here. A few one over here. We can see some examples, actually a lot of examples that indicate that change signals in the gasoline market are useful signals. 5 years chart, let's have a look at the extreme here. There we go. You can see that we have had this bearish COT extreme signal last week. Actually, we could say that for a few weeks now we've been in this more extreme territory, both of course in large speculators, commercials, and actually small speculators too. So we're not that surprised that we see a bit of a decline in prices. NASDAQ 100, 21% change over there in commercials positions, 57 in small speculators. That's pretty interesting. Again, this is a bullish change signal. Of course, we're not going to be surprised if we see very similar analysis over here as we had in S&P 500. Of course, these markets, I don't need to tell you, correlate pretty significantly with each other. So basically repeating ourselves, you can see that we've moved away from bearish extreme levels. We see a bit of a rise in prices in the last few weeks now. And COT data wise, we don't really see anything that suggests this rally cannot continue any longer. Moving on to large speculators COT Extreme. Here we go. 126 report extreme in Russell 2000. Let's have a look at that market. Here we go. What is very interesting, you're going to see, is we actually are talking about more of a bullish extreme signal in Russell at the moment. So you can see commercials being at this level. This may push prices higher. Of course, we've seen the same. We've actually had bullish COT change signals in S&P 500 and NASDAQ. So having this extreme pointing upwards in Russell 2000 again supports rising prices in indexes. The Chicago wheat, we have a 76 report extreme over there in large speculators. You can see them over here. Let's open the 5-year chart right away and see this extreme on a wider time frame. Here we go. You can see that we are getting closer to these bearish extreme levels. You can see the last one we had over here in 2012 managed to end this rally. Then we had a significant extreme back in early 2011, and this extreme is widening right now. It, of course, can grow even larger before we see a top in wheat. It's hard to tell exactly when it's going to stop rising, but it's definitely there. The extreme is there, so anybody trading the wheat market should pay attention to the COT report. Corn, our last market for today, 73 report extreme in corn. Let's open a 5-year chart. Here we go. You can see that we are getting closer and closer to these bearish extreme levels. You can see significant extremes back in late 2010, early 2011 that ended this rally over here, and we are gradually getting closer to these levels. I'm not saying that we're there. This can go even further, of course, although we do see examples that we not necessarily have to reach those levels to reach a point in time when prices fail to continue their trend. In this case over here, we had a bit of a rally that stopped. So that was corn. Anybody interested in other markets can check out our COT charts page, where you can have a look at other COT charts, of course. You can have a more in-depth and detailed COT analysis at our COT analysis page, obviously. You can add other great functions to a table: the long-term trend, volume and open interest scores, the COT index. You can look at market complexes. You can look at new COT report types, the CIT, TIF, disaggregated. Of course, you can look at the futures and options data type as well, or do your historical analysis. A lot of great features here to see. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.